There is one stock that is about to break out. It is a robotics stock that has a robot in a humanoid type form factor. So if this is the direction that Tesla is heading, this is a tiny company that could become the next Tesla. There is a short report out on this company within the last 48 hours. Let's check on the short report, see how credible it sounds, and look into where this company is price-wise, as well as what they are doing. If you haven't hit that subscribe button, hit that so that you get notified of new batches of videos, all right? You only get a few notifications a day. Check it out.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here is a little bit about the company. They basically are selling robots to China, okay? And they're going to be added to, well, they are added to the Russell, which we can see over here. So here's the Russell. That's a small cap index. IWM is pretty much follows the same price action, and we look at that as opposed to looking at the NASDAQ or the tech index, the QQQ, or the SPY, which is affectionately called the market by most. Here's the stock that might explode, break out. Let's take a look at the price action here in just a moment. First, we'll jump into a little bit more about the stock, but this is sort of the play. It's retraced a significant amount. There's a level over which to buy, and you can see it retraced over here, and then we had this move, so that's kind of the idea. Get another move. Before we jump into that, it's a lot of volume here. Let's jump into a little more about what this company does. So this is actually the subject of this short report, in a sense, is they have a sales agreement with a Chinese company. So that's great until there's a US-China tiff, and this company's sales go to zero if China pulls out. So there's also this Form 4 is the SEC Edgar form that notes when people sell. So this executive sold 100,000 shares, so it's like $500,000. So, you know, maybe that's a lot, maybe that isn't, but on a company this small, it is notable, and people will see that. So it could have a dampening effect. This is kind of the dealing we're dealing with here. Is a lot of dilution risk, right? But they don't have cash, right? So they got some cash, 100 million, and the number of shares to be traded is a lot. It's 100 million shares. So typically, if this were like, 1 to 10, you'd be a little worried in terms of buying something like that. It could just come right back on you. And if we look down, why is that dilution risk so high? Well, in the past, let's say, a few months, they've raised $70 million, okay, which is great for the company. But what it means is that the price goes down when they raise. So that's because they're selling shares into the market. So if we actually look at those days, August 11th and June 30th, well, June 30th is somewhere in here. After that raise, the price did go down a bit, so it doesn't look like much, but when you're actually in the middle of it here and you're thinking of buying here, which I wouldn't see any pattern here, but if you did, you'd lose about 20% of your investment, or almost. And then August 11th over here, now, actually over here, in this case, this was bullish, okay, so that sort of checks out if the raise was at $2, although it's possible, it's actually probable, it's almost certain what happened is there was so much buying activity that it just overwhelmed that amount of selling. So That's the dilution risk. It could go down. There could be so much buying that it doesn't matter. But if we want to get super granular, we can. And we can say they sold about 10 million, 20 million. Let's say they sell another 10 million shares, which would be a large raise given that the price is like 4 times this now, $2. It's up at like 8. Well, actually it retraced significantly. It's over only at 4. Got a little exuberant here. So if they sell 10 million shares at $4, it's a $40 million raise. That'll increase their cash like 40% because they have 100 million in the bank, right? So that's somewhat reasonable that could happen. It's only 40% more cash than they have. So let's say they raise it here and it's 10 million shares on a day that trades 40 million. You can see the volume down there, 40, 50 million. 20% of the shares will be sold shares. They're selling them into the market. So when you add 20 million shares to a float that's 100 million, essentially what you've done is increase the float 20%. Well, a little less than 20% because the float's a little above 100 million. But so you just got to think about that in terms of selling pressure. It's significant. If it were just, say, 5 million shares, you only have 5% more sellers. You know, whatever. That could be the same as some big retail guy coming in who has a $30 million account and just saying, I want to dump my, $5 million position, $10 million position. But it's not 5%. That would be 20% if that were to happen again. So that's the risk, in short. You could have another drop like we saw here. But if there's so much buying activity, like at the one we showed here, the stock could still go up. Okay? Now, let's jump into a little bit more of exactly what this company does, aside from the dilution risk. But the reason we talk about dilution risk so much with these tiny companies is that we don't really need to know what it does in order to make money off it, right? It's either going to go up and make more money, or it's not. And these returns in terms of revenue are so small that doesn't really help us. Like, what are we supposed to do? Build a cash flow model off of what is basically a startup that has $4 million of revenue? That's ridiculous, right? But here's the deal. This is sort of the glint in your eye. If you look at this company and you want to hold it long term, which I don't suggest. I suggest holding it for like 3 to 5 days and then selling half, and then you can hold the rest if you're in the money, if you're making money. This is kind of what you have to keep in the back of your mind. Even if they execute in China, given the hurdles there, that whole market could get shut out from them. And in fact, this is sort of the challenge, okay? The short report mentioned the rebranded Chinese robots. This is sort of really pouring it on, but I would say the part that is scary is, this Walmart contract being misleading and being a small pilot in a single store is a little bit scary, given that there are a lot of sort of direct-to-consumer brands, and because calling this robot company a direct-to-consumer brand like it would be a deodorant or something, like a native deodorant or a Dr. Squatch. But I mean, we're just investors. It's great that they're doing complicated stuff in terms of technology, but that doesn't really matter to us. So, look, here's the deal. The short interest is usually delayed, how many people are short the stock, so we can't really read too much into that. But the fact is that this is sort of normal. 30% would be worrisome. And you could look at small changes, but again, it's because it's delayed, by a couple weeks at best, I would say, maybe more, longer than that. You can't really read into that. So we already talked about dilution. That's aggressive share issuance. We know where is weak revenue. We've never realized what it is. It's a small company, and this sort of exaggeration of the Walmart agreement it is what it is. You know, it's like if you say you have a collaboration with Walmart and it really just means they're setting you up on as like the end cap on one of their aisles, like next to the bananas or whatever. It is what it is. We kind of already expect grandiose statements from founders and stuff like that. So press releases. But in terms of, you know, just not really being able to verify the revenues at all, like it's fine if they're small, but not knowing if they're true, that is a little bit of a problem. So this is what they reported, and they also reported a number that was down 20%. So that's for the quarter. So this would check out. This would be for the full year in the last 12 months. So this is the challenge, right? If this is true, that's okay. You know, we can buy a company that's using China as its sort of guinea pigs to test these out, and then eventually bring the technology into the US. But if this isn't true, then we really can't be buying this shell of a company, even if it has momentum, right? It's just too risky. Again, if this is true, this is great. This is insane, right? 60% gross profit is software margins almost. So that's sort of the worries. You know, is it a letter of intent, non-binding letter of intent, or is it, hey, you know, they wired us money and we have some units that we need to ship them because they just wired us money? It's a big difference. So we'll see what happens. It would be great to get some contracts in the US that are of that size that they can announce, even if they don't announce it with a big name. They don't need to announce it with a Walmart name on it. So I'm not trying to like I almost feel like I'm like pretending to be worthy of advising this company when really all I'm trying to do is give some ideas to you guys as to, you know, is a $4 stock that has $4 million of revenue that's from a sales agreement with a Chinese company worthwhile to buy. And after all that said, if we knew nothing about this company, we have to say, okay, this is a ton of revenue. It has a history. If we look, you know, as far back as we can go, we can't go farther back than that. But recent uplist, I believe, maybe I think it's an uplist. I don't know. It has a history of making big moves. Okay, this is $1 to $5, and you know, IPO wise, that's sort of on par with this Figma move. Although it's completely brain dead to compare Figma, which is like a multi-billion-dollar revenue company, to a little uplisted Chinese. I guess I can't call this it's not an ADR, so I won't call it an ADR, but it is a company that is recognizing revenue from China. Okay, these two words put together are dangerous. There's been a lot of news stories, and you can look at the charts too of stocks that have done crazy China moves. TOP, XXII, it's two relatively recent last few years examples. So all this to say, for the eager to buy, I got to put on my optimistic hat here and say, look, here's a level to buy. It's bouncing off this moving average that's rising. And there's a reason I'm talking about it. I mean, it can make crazy moves, and it's 100% in less than a month, okay? For any account with less than, you know, $20 million in it, you can put a quarter of your account, $5 million, in this stock and definitely not be at risk of moving the stock any more than maybe 20 cents or more. Someone who has put $5 million into this stock can, you know, fact check me on 20 cents of slippage, putting a 5 million position in, but you know, you get the idea. There's a ton of liquidity right now, and you can risk off this moving average or off this high, which is about the $4 whole dollar number level. You do have this high of $6. This all-time high is super high, and then, this is basically $6 here anyway. So $6 is a really important level. And to say it super simply, because at the end of the day, that's what we do. We simplify, we oversimplify actually. And that's what an investor does. So you risk 20 cents and you make $2 or $3. So maybe make 10 times what you risk. That's the whole idea here. And that's the level, right here at $4. We're a little above it right now. So that's the spot to risk, 20 cents, and try to get over this $5-6 high, make $2 or more. All right, I could talk about this all day, but I would be repeating myself. If you like these stock ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. Ask your questions in there. If you're looking for like a flood of stock ideas and chatter and like a Discord party, that ain't it. It's a place for you to ask questions and sort of have a long-term view of trying to beat the market each year, consecutive years, many consecutive years. So give it a shot, $25. If that's a lot for you, please don't join. Seriously. And if you haven't hit that subscribe button, hit that subscribe button so you can stay connected. I will see you in the next video.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.